All right, hey, good afternoon, everyone. All right, 2:30, the market's been out. Let's just jump right into it and look at what the report said. Here is what the USDA actually said from their WASDE. Then over here, I've just moved these same numbers over. There's a few changes here, really just due to rounding, I think. Let's double check that. Here, this is 1452, not 57. And 15.1. There's a little rounding error here in the spreadsheet, and so we're real close. Okay, so and then this is the bullish case. This is what would happen if we were to drop yield. Okay, so the USDA increased harvest acres and increased harvested acres. They also increased the percentage of harvested acres over the normal part, which is interesting given the fact that they have that there's lots of chopping and things like that going on. They took away some beginning stocks and then ultimately left demand the same as they did in August. So really, they increased the carryout by about 20 million bushels off of increased acreage. That's pretty much kicking the can down the road, saying, hey, we'll have to see what happens later on. Remember what they did last year to get to a yield of 173 was they ended up decreasing harvested acres by increasing abandonment. And so a lot of people don't really realize that. And the impact that has is that this 173.3, everyone says, well, that's off of a good to excellent rating of whatever. But it's off of a good to excellent rating before they put the abandonment out. So to get true apples to apples, you have to adjust this number to compare it to where we are today. And if you adjust last year's number, it was 167, and another analyst came up with those numbers earlier today. And to give credit where credit's due, that was Darren Fry. So I appreciate him putting it into that context because it's helpful. Because you have a worse good to excellent rating on more acres. So I wonder what this yield actually is if last year's was actually 167. If you take our yield down to 167 just off of good to excellent ratings, then this is what our carryout ends up being. So I think that there's downward revisions coming, and I think that as combines get to rolling, you're going to start seeing that come through. And I think what could happen is they could try to keep yield up, but they'll start decreasing the acreage numbers just like they did a year ago. So I don't know if this 2.2 number is really going to stick. They certainly didn't do a whole lot with it other than adjust it just a little bit, but they didn't give the bulls what they wanted, so the market got sold. And we'll look at that on the charts here in a few minutes. This is soybeans. Exactly what happened here is they ended up decreasing the carryout by another 25 million bushels, but they didn't decrease it by as much as the trade was looking for. And I think what really kind of caught the trade off guard, or upset isn't the right word, but created some selling pressure, was the cut to demand that the USDA put into the soybean balance sheet, and that did enough to offset a yield reduction to 50.1 against last week's 50.9, and where the trade maybe thinks we're headed, which is 47. So like corn, if you get in the field and the yield starts coming in below 50, then beans get tight really quick. So again, price action today was a little bit bearish because we did break, but on the other hand, nothing's really changed fundamentally, and these markets didn't really take out any meaningful resistance levels or support levels. So I think we stick with our analysis for now. I definitely don't want us to see any price action down here below 1332 or really even below today's low. So I think we'll just kind of take it a day at a time and see how the trade tries to absorb this, whether we've done it all today and we just go straight back to where we were trading, or whether it takes a few more days to adjust and kind of price in the report that we got. Again, the USDA really just either kicked the can down the road or just said, hey, it certainly didn't give the market a signal that we're going to run out of anything and that we need to ration. So if that's going to happen, we'll have to get some sort of a signal or some sort of a catalyst to induce that to happen later. But as it sits, we will just watch it, and any action weaker, we may want to increase hedges or whatever. But if these areas down here hold, then I think up and away we go. But nevertheless, today we got to deal with the downward action. Corn, they really made no change to the corn balance sheet other than adding just a little bit, and corn did sell off. But if you look, it really didn't break anything at all. Would we have liked to have seen it close above all this stuff? Yes, absolutely. But again, we didn't get a whole lot of meat on the bone if you're a bear either and thinking that we need to drop to $4 corn or whatever. I don't think that that's what's in the cards here because of the sensitivity we're going to have to yield decreases. And also to the abandonment of harvested acres if the USDA decides to come out and do that. So I think like soybeans, we're going to watch this level here. We want to stay long up above it, keep our upside open. We are using 470 puts here to manage our risk to the downside, and we want to continue to do that. And then if we end up in a situation where we're breaking lower, we're probably going to step in and look for great opportunities to re-own those bushels on a lower move. We're just going to hold our hedges, and then eventually we'll lift them, and then we will look to re-own those, because I think the November, December, January, February time slots could really be beneficial to our corn market. Now, one of the reasons we think that is wheat actually behaved somewhat rationally today, in our opinion. We did have a hook reversal. We do have a confirmed divergence here at the low. I'd like to see today's high taken out and trade back above these prior swing lows right back in here, and really a move back above 745, 750 area is what's really needed to solidify that this is a tradable low. But I really like the setup here because we've got nice divergence action. We've got quick lows that continuously get bought. So I don't think wheat is going to just work itself into oblivion here. The report today, what it did was hold everything in the U.S. the same, but decrease world stocks, which means we have we have a tightening balance sheet globally, which should lend itself to higher prices. So despite today's trade action, I think the market's just saying, not yet. We need to get a little deeper into harvest, and we need to get a little bit more harvest data before we put some premium onto these markets and start reflecting what those fundamentals might really be. Okay, so no changes from our marketing perspective at the present time. We're going to hold exactly where we are. We're not going to make any adjustments. We're just going to let the trade digest these numbers a day or two and see what happens. And we will keep you up to date as that trading materializes to keep you positioned the right way. Okay. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. We will be back with you tomorrow. And remember, we are looking up from here in all these markets, and we won't be very tolerant of much downward action before we look for another buy like wheat had today. Have a great day. We'll talk to you later. Thanks.